Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to have kind of an emergency video to show you a pattern that I'm just looking at right now, which does seem to be appearing on my screen. And so for this, let's go ahead and take a look at our indicators. Something that you'll notice about our current setup right now, on the 6 hour in particular, is that we have a very similar setup to the conditions that seem to precede a second drive down. We've already had a pretty significant drop in Bitcoin, and of course, Bitcoin leads the crypto market. And so, if Bitcoin has a drop, then all of crypto drops. So, if Bitcoin has another drop, then you can understand that maybe all of crypto might drop again, right? And so that's why looking for these type of setups are pretty important. So the conditions that we have here right now are, the RSI is in the bearish control zone on the 6 hour. The Stokes is just rising. It's not maxed out, but it's rising. The MACD is crossed bearishly and continuing to the downside. You know, this is a set of 5 indicators, called the Joule. Like they're all crossing down at the same time. Volatility is on the floor. On this directional volatility, and then on the non-directional volatility, we have it not maxed out. Okay, so the non-directional is not maxed out, but in expansion, and the directional volatility is maxed out on the floor. Okay, and so under all of these conditions, I just went ahead and just back tested the recent movements of Bitcoin ever since we had that apex at 53K, dropped down to 40K, went up to 69K, dropped down to 33K, and then of course came up here to around 48K, and now we're of course at 43,000. I back tested all of these regions just to find the similar conditions, and in every single case, they corresponded with a second drive down or a huge push down. In other words, like a double push down. So these conditions seem to precurse either a significant drop on its own or a second drive down after you've already had a first drive down. Of course, Bitcoin's already had a first drive down, so this would bode not well. It would bode not well for the next possible move of Bitcoin. Just in case any of you want to take this into consideration, you don't have to take my word for it. I've marked it out for you so that you can double check. If I've made a mistake, go ahead and leave a comment in the comment section. However, I'll just go over these one by one. Huge drop from 53K all the way down to 43K, right? So a $10,000 drop. RSI in the bearish control zone. Stoke almost maxed out, not maxed out, but on its way right before the drop. Right, MACD pointed down, pointed negative. All of the joules, 5 indications pointed to the downside. Volatility on the floor, directional volatility on the floor, and non-directional volatility expanding, but not maxed out yet. All right, and here we had from 47,000 all the way down to 39,000, right? And what do we have? RSI in the bearish control zone, Stokes rising, MACD dropping, 5 indicators dropping, right? Nothing flat on this, they're all dropping. Directional volatility on the floor, non-directional volatility expanding, okay? From here, we had, 62,000, and then this was the setup all the way to, 60,000, I guess you could say. So this wasn't, actually, this setup is a little bit different in that the MACD wasn't fully, crossed under. It does seem to have, this is interesting. It does seem to have, this was the first drive. The second drive appears to be right here. where the MACD is under the midline and dropping, and then the jewel is dropping. Volatility, directional volatility on the floor, non-directional volatility rising, and then RSI in the bearish control zone, right? And we had a second drop, and that brought us from 63,000 all the way to 57,000. This was a little bit of an awkward spot. We were still technically rising, but that was a huge indication of a second drive down. Here we had a drive down, and we had an indication for a second drive down. RSI in the bearish control zone, Stokes rising, MACD under the midline and dropping, the jewel dropping, volatility, directional volatility on the floor, non-directional volatility expanding. What did we fall from? 63 to, you can count this whole move basically, so it was basically to 55. Here we dropped from 58 all the way to 45,000. RSI in the bearish control zone, Stokes rising but not maxed out. MACD under the midline and negative. Everything on the jewel pointing down. There's some, I don't know if it's just, this is just a slight deviation in one of the indicators, probably negligible, but all of them mostly down and bearish, and at least under the midline or at the midline. So this is a slight deviation, but it was also probably the most extreme one. So it's interesting to take a look at that later on. Directional volatility on the floor, non-directional volatility expanding, but not yet maxed out. You can see this max out by, you see these little white crosses, and the volatility should be up against the ceiling, and then the white cross comes to cross over the downturn. And so the white crosses are still rising, so it's not maxed out yet, and it is just on the side of this rise. But this was quite an extreme one. Here we have 51,000 dropping all the way down to about 45,000. And that was, of course, RSI in the bearish control, Stokes rising. MACD pushed, down below the midline. A little bit delay here, but most of the indicator was crossed over at the time. And, everything pointed down on the jewel. Directional volatility on the floor, non-directional volatility expanding. Another huge drop, 46 to 39,000. RSI in the bearish control zone, Stokes rising. Yeah, the MACD well under the midline. Everything crossing down. Directional volatility on the floor, non-directional volatility expanding. Of course, we do get a little bit of a bounce after this. We get a little bounce here. We do get a little bounce after these second pullbacks, okay? Like almost all of these second pullbacks have little bounces that follow them. This one was pretty brutal. This one had a nice bounce. This one did have a bounce here, but it just kept dropping. Like this had a third and a fourth drop. Fast forward here, 42,000 to 34,000. RSI in the bearish control zone. Stokes almost, against the roof, but still rising. MACD under the midline. All these indicators pointed down. Directional volatility on the floor. Non-directional volatility expanding. 42,000 to 34,000. Right? These are almost $10,000 moves. Okay, nothing to sneeze at, right? RSI in the bearish control zone. Stokes rising. MACD under the midline and dropping. All these indicators, the 5 indicators, dropping. Directional volatility on the floor. And of course, we had the non-directional volatility, expanding. In this case, it was more in line, perhaps. You know what? This could probably be brought back here a little bit, and this might be considered the first drive down. Not sure. This was a little bit weird, kind of like up here, just a little bit weird. But yep, this one did end up having kind of a recovery pretty quickly after it reached the bottom, but it did drop. it did drop from 44,000 to 34,000, so $10,000 almost, right? Just depends where you measure from. And of course, right now, you can see our current price action following everything right there, right? So we've already had a first drive down, kind of indicated by this section. We have the RSI in the bearish control zone. The Stokes, it's not sure if it's not sure if it's considered to be rising anymore, but sometimes it does have these weird little wobbles in it, so it might give it another go. But just to show that there is some kind of slight difference, but we did have a little bit of a downturn here. Yeah, there's these little edges on it, just when it starts to max out. Yeah, there's a little edge here, a little edge here. So that might just be a little bit of an edge to it. So we could consider that this is still probably valid, but definitely the MACD is under the midline and dropping. All of the Joule indicators are dropping. We do have a slight indication of a possible upturn in the basic Joule, but we sometimes get these, and while it's white, you can't really get anything from that. So sometimes it turns up and it turns down very quickly. Like it can be just indicating a really tiny bounce, which you can see we do have a little tiny bounce here. So this is another possible point of disagreement, like right here and right here. But otherwise, these could very easily flip down, right? Because also we have the directional volatility absolutely on the floor, and the non-direction, or pardon me, the the directional volatility on the floor, and the non-directional volatility is expanding, which you can see the white crosses are still continuing up, right? They're still continuing up. It's not against the roof or anything. It's just expanding. It could have another drive up. And so while this might be considered to be turning down, right, and that could perhaps join this and this, and possibly having a bump or something here, maybe over the weekend, a little bit of a bump. I would just say that all of these signals taken together, very, 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 very precarious, right? Precarious. So let's see. The EMA is on the Stokes crossing down, EMA is crossing down, EMA is crossing down, EMA is crossing down, EMA is crossing down, 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 yep, down. And this one is floored. So I'm not sure. This is probably the one that I'm most concerned about as possibly negating this. But in terms of a warning, I would still be on high alert because I don't think that this has that much power. This is a relative indicator and the lines do adjust. So yeah, we can consider that we're still in this kind of dangerous territory. And just like the RSI, you can probably see it. I've marked off this line here where they tend to cross over. Like they're also in the same, relatively the same zone when these the next drive downs happen. A little bit higher, same, same, a little bit higher, same, same, a little bit higher, same, a little bit higher. So yeah, it's possible, it's possible to see a drive down to this level on the RSI if this one continues. Now we do see one one drive bottom, I mean, a second one, first one, second one, even kind of a third one here. Just see one here, 1, 2, kind of 1, 2. Yeah, you can consider this one a third one. Yep, 1, 2, 3. just one. So we can't really predict, it seems to be like 1 to 3 of these RSI dips. And so if this is just retesting the RSI right now, and then it's going to have another dip, that could be the third one, right? But I just wanted to get that warning out there. Uh, if you're not taking this serious, you should probably take it fairly serious. Of course, we could see a bounce, but just historically speaking, these set of indicators have indicated, a bigger problem than just what might superficially be considered. And, maybe we do see something like this, right? Maybe something like this is possible. But we do get this kind of move up and then kind of a down. Like maybe those two indicators that are, not 100% on board, all right? Not 100% on board. We're just not confirmed, rather, because they could still easily become compliant. Maybe they're indicating that maybe we're just going to get a little bit of a bump, maybe a weekend bump, something like this, maybe. That was a pretty extreme one. But this was a very powerful drive down, so it had an equal reaction. Since this wasn't that powerful of a drive down, you would expect the bump to be quite smaller if it is just a reaction rally, right? Where a lot of people think this is a good price, so they get in the market. And then you come back up to these diagonal levels where people think it's a good area to sell, right? Something like this. And so then, they get dumped on basically. So if this is true, if this pattern is holding true, then I wouldn't expect us to rise above 45,000. I mean, we could say 46,000, but I wouldn't expect us to rise above 46,000 and maybe lower. Just as a reaction rally before the rest of this move plays out, perhaps over the weekend, kind of a fake out. But in order to negate this move, we'd really have to break above that 46,000 area, and we'd have to hold it. So first we have to, reclaim 43,500 as support. We have to turn back up and hold that area. And then we have to reclaim $46,000 pretty quickly. Like within the next couple days, we have to reclaim that area pretty quickly. Otherwise, we're going to continue down, right? And on the daily, it's not looking good, right? It's not looking good. I mean, we are just kind of like under this area right here. You could say that when the 10 and the 200 cross, it's kind of a bad thing. But we did have that happen here, and it wasn't a bad thing, right? So yeah, I'm gonna stick to my point here, right? Like I'm not gonna over focus on this cross. I don't think that the 10 and the 200 crossing. But you know what? Here's the thing. This is the point that I'm missing, actually. So sorry about that. Let me go ahead and turn this one to a, let me just remove this actually and simplify my EMAs. I mean, I'm still going to stick to my guns where if we reclaim, 43,500 and we can sit on top of that and then we can jump to on top of 46,000 and hold that, then I'm going to be kind of bullish like in this area. But one thing that never happened here is that the 10 didn't cross down over the 200. And now that I'm looking at this, we're not skimming off of it. Like I thought we were just like kissing, but actually we've crossed. And yeah, if I look at that, that's not good. Yeah. Yeah, my mentor, Crypto Retta, taught me that. So I do remember that lesson. And I think he maybe even mentioned it today. So that's a very important thing. I wasn't, yeah, I missed that point actually. This was just a skim and this is a cross. But hey, you know what? Like I said, like if there is a pump because there's some kind of deviation in the indicators or basically in the momentum, okay, because that's what drives markets, momentum, right? If there's some type of deviation to that pattern, then what could happen is enough momentum could uncross these. And then for all we know, this started out as a cross and then we had upward momentum that got it uncrossed, right? And it's still close enough that it could be uncrossed if we can get over, let's see, what would be the goal here? I'm just going to say 45,000. Like we have to get it to 45,000 and hold 45,000 to uncross these. Like we really have to hold 45,000. That's really essential. That's really what we're talking about. We have to hold 45,000 at this point. The standard keeps rising, and this, like we can't ignore this. We can't ignore that. This has to get uncrossed. We have to hold 45,000, and then we very quickly have to retake 46,000 and just hold that area. And then perhaps what would happen is that those EMAs would uncross. This red and the orange one would uncross, just like over here. And then there would be the potential for momentum to take us back up. But as long as these remain crossed on the daily, that does not look good, especially that I'm also noticing this, especially that the 20 is pointed quite sharply down. In fact, it looks like this, right? Like if we don't get to that 45, this 10 and this 20 are also going to cross, and then you see what happens after they cross, right? So what kind of a move, what kind of a percentage move was that? It's about a 10% move. Where would 10% take us? To around 40,000-ish, approximately, right? Which would be pretty much in line with the direction of our price action here. So there's a chance that we could, hold in this area also. But I do want to give these warnings because it is looking like from an EMA perspective, which again that my mentor Crypto Retta taught me, and then also from my own perspective from doing analysis, my own analysis, both with diagonals and then also with the set of indicators I have on the board here. I am seeing something potentially disastrous for a next push down. So let's see. Let's see if the non-professional markets, right, the 24-hour, 7-day-a-week markets, the heavily manipulated markets, let's see if they can kind of push us up during the weekend. And maybe it will turn out into something that's not a fake out. Maybe they'll actually get us, above 45,000 and into 46,000, and maybe we can hang out there. And if we hang out there long enough, maybe we can turn this area into support and bounce. But the professional exchanges that operate just 5 days a week and not during holidays, and they close down at nights, they are going to be closed during the weekend, and so some shenanigans can happen. So just be careful. Like it's very easy to get faked out during the weekend, and all of these indicators say that we want to drive down. The EMAs say that we want to drive down, and so if there was any chance for the non-professional 24-hour exchanges to kind of just liquidate you and take all your money, that their chance is to do it between like Friday to Monday. Okay, Alpha Fam, I hope you enjoyed this kind of analysis. If you like that, you can send me a message, leave a comment, join the Discord, do whatever you want, but you can just let me know if you like this kind of thing or not. I'm going to just continue to make videos that are just things that are on my mind about the market. I'm not really concerned with followers or likes or comments and all that stuff. I just want to know to let you know that you are welcome to leave those comments. I don't get offended by anything. If you see that I made a mistake, then go ahead and point it out. no skin off my back. I'm not selling you anything. I'm just trying to be a continuous learner and slowly improve. And then, who knows, what that result will be over the years to come, right? So hope you again enjoyed the episode. That's my alpha for the day, and trade safe and happy trading.